Hey everyone, welcome back to the Smart Trade Action channel. In today's video, I am breaking down everything you need to know about the current crude oil market and how you can take advantage of its volatility with both long-term and short-term trades. Recently, oil made a massive move from $65 all the way up to around $120, an incredible swing. Right now, it's trading between $85 and $87. And in this video, I will show you exactly what that means for your trades. So this is the US oil chart on the weekly time frame. So as you can see here, we have the 50 moving average, which is a white line. Everything looks clear, but we still need more information to fully understand what is going on, where all of this rally started, and what could potentially be an opportunity we can take advantage of with this current situation. So on my chart here, we have more details overlaid, and as you can see, this particular zone, this supply zone, has been there for a very long time. So this point has been acting like a supply zone. Whenever the price gets to the point, it goes down, gets to the point, goes down, over and over again until everything flipped at this very point. So this is where the narrative changed, where the 50 moving average broke this zone above, price retested it, we got a green engulfing candlestick there, and that was how the whole narrative changed. All right, now let's look at what happened after that. Just a quick one, this asset, crude oil, can be traded on MEX platform, and currently there is an ongoing bonus primarily for my viewers. Here are the details on claiming it. Just scan the QR code on the screen, sign up and claim your reward instantly. You'll also find the link right below this video. Click it and take action. Spots are limited, so make sure you don't miss out. Alright, now let's jump back to the chart. This line, this zone, became a demand zone afterward. But before that, we had this zone where the price, after this rally, came back to it below the 50, traded below the 50, fell back, supported here and here, and also went back to the zone. So basically, the price hasn't gone below the $55 zone of this very asset, which is the US oil, right? Now, what is currently happening is very interesting because we are currently trading within this box zone. This blue box is actually a market supply zone, and here is the demand zone. As you can see, we made a very strong rally from point A to all the way to as high as $120. Now, since we are still inside this zone, a lot is kind of playing out here, because if you look critically, you don't even need to look critically, guys. You will notice that there's a very big gap from this price point to where the 50 moving average is. So this gap could be filled. That means the market go back to retest the 50. So before this trend will continue strongly on a long term, remember this is a weekly chart, so we need to retest the 50, just as we did here. A very big move, we retest the 50 and boom, we made a very big move. So there's a chance for us to retest the 50. So there's a chance for this market to actually go down on a long term. All right, because this is a very critical zone that most of the times when the market gets to this points, it gets rejected. So but if the price stays within this point, we see maybe a green candlestick, coming out and closing above this zone. That could be a different game entirely. All right, so now we need to look closer into the smaller time frame to see in the short term, what can we do about this opportunity? Is there trade opportunity for us to jump in for, or is there something we need to wait for before we take any action? Let's check out the 4-hour time frame. So this is the 4-hour time frame, actually on MEXC, and as you can see on this time frame, you see that the price of the asset of this US oil has always been above the 50 moving average. This is the 50 moving average, this is the 4 moving average. As far as the price stays above the 50 moving average, it's a very high chance for this trend to continue going up. Yes, very, very high chance. And as you can see here, this box that we are seeing here is a strong demand zone, because before we made this strong rally, this was the high. All right, and then market revisited it and respected it by closing above the 50 moving average. And before we made this strong rally after this high, this was the point where we got a strong move of the candlestick from point A all the way to this point, an explosive move. So if the price stays above this demand zone, or even if it goes inside but quickly closes above it, then it's healthy. Secondly, if it stays above the 50 moving average, because it's very, very critical that it stays above the 50 moving average. Then lastly, there's something else we need to look at on this chart. But before I go, I show you that if there's also a bearish scenario on this chart, as you can see, we have a line here which is the 70 mark. This 70 mark, as you can see, is not a mark we should play with, because if we have any move below this point, maybe the market start trading below the 50 moving average, there's a chance for us to visit this critical zone, and I don't think we'll go below this zone anytime sooner, except there's something, the news, the government, or something that could happen that will make us to go below this point with what I am seeing on the chart technically. All right, so everything is looking strong and bullish. So if we have any bearish scenario where we start trading below the 50 moving average, we could retest this very line. But if we keep trading above the 50 moving average and above this area, we will continue going up, and this will be a very clean trade setup, a very clean long setup if it plays out, all the way to this point. It could even potentially go higher. That is if we stay above it, something risking like 4x trade. Now, apart from that, we need to look at the momentum of the market. Before now, this is what happened in the past. If you look at the MACD, you see that the MACD was at the 0 mark. Now, if you look at the price was actually around the 50 mark. Look at it here, around the 50 mark. So when the MACD goes to the 0 zone and above the 50 mark of the price, market usually makes a strong move. You can do your checkup, you can do a back test. This really works pretty well. Right now, this is where the price is. MACD is close to the 0 zone. Even if it doesn't touch the 0 zone, it's not supposed to go below the 0 zone. So if the price starts making move from this point that the MACD is, it didn't cross down but start making move, and the price still stays above the 50 moving average and above this box, then we are in for a stronger move to the upside. So if you bring in this momentum confluence together with this very box and then the 50 moving average, there's a very, very strong chance for the trend to continue going up. But we'll wait and see what the price does in a couple of days. Or if you're the type that is hyperactive, you could actually take a trade, but make sure you set your stop loss below this zone, because at this point you can't guarantee anything based on the whole activities that is going on generally, globally, the US and the Iran. So thank you very much guys for watching. I'll see you in my next video. Bye bye.